Hey, it's Michael Saul, but everybody calls me Tiny. This video is Respect the Trend or Get Yourself in Trouble. This is stock market analysis for the week of April 23rd, 2018. So before I start looking at the market, two quick reminders. Number one, if you would like to join the free Facebook group, go to www.facebook.com/groups/attackthemarkets. Just have to answer three simple questions. Well, they're not really questions. One of them is, you promise not to be a jerk. I guess that's a question. Or it's a pledge, I guess, right? Okay, and the second announcement is, if you would like intra-week updates, go to www.attackthemarkets.com. Put in your first name, best email address, and follow the instructions that follow. You have to go to the email that you used, look for an email from me, click on the link to confirm that it's actually you and not some nefarious robot going around using your name and email to sign you up. I have a nice announcement on Monday, so it's a good idea to sign up now, and the announcement will come out, I'm thinking about 10:30, 11 o'clock Monday morning. Okay? All right. So let's take a look at the market. The S&P got off to a good start, or the market overall got off to a good start at the beginning of the week, but then ran into some resistance and started to pull back. So last week, I believe it was, I gave two scenarios. It was either last week or the week before. They're all kind of molded together now, right? But anyway, the two scenarios were we turn it, sell off, break the February lows, and go down to this zone. Now, this was my preferred scenario for a while, if you watch my previous my videos over the last previous weeks. But the second scenario, I think, is holding a little bit more water here, and that is we put in a lower high, which we did. We come down here, put in a possible higher low, and then we start moving up. This is a wave 4 corrective triangle. So I put some levels to watch here on the S&P. You have the 62% retracement of this last swing. That comes in at 261.21, but the 200-day moving average is also there, so that we'll see what that does. Then you have the 78.6% retracement down here at 258.55. If we continue down and test this low, it's probably going to get broken, and that means the February lows are probably going to get broken, and then we're probably going to go down to this zone. All right, so if it sounds like, well, I'm not really sure, yeah, that's the point. Okay, we are in, no matter what you want to call it a triangle, whatever pattern you want to call it, we are in a consolidation here. And trying to guess which way we're going to come out of a consolidation, despite the huge uptrend. Okay, I get it, right? Despite the wave count, I that some Elliott waivers have, and that I'm kind of latching on to, because like I said before, I'm not really an Elliott wave master. Despite all of that, in a consolidation, you have to take it swing by swing. And right now, this could go one of two ways. So I am going to be watching to see if we do retrace down here, if it does hold, if we get a reversal pattern, even a one-candle reversal pattern is fine, what we do from there. But I am looking for short-term weakness until we at least get down to here. So on strength, I will be looking for shorting opportunities to trade lower. All right, now let's look at the other indices. Here's the NASDAQ, and this is the line we had drawn in last week. Like I said, it was just a guess. It's 2 points, so you can't really put your thumb on this and say, oh, okay, this is a valid trend line, because only 2 points. You connect any 2 points, right? But it looks like it's the same type of pattern. Here's the Russell. Okay, the Russell did not close above the 78.6. It turned before it. Here's the mid-caps. You could see definitely showing a poorer relative strength than the small caps, and the Dow, if you really care, looks more like the S&P. So if we look at some sectors, we have the semiconductors are continuing to act weak. We have the 200-day moving average here. They've already traded down to their previous lows here. So watch the 200-day moving average, then watch the February low. Yes, the broad market does not have to follow the semiconductors, but the semiconductors do carry some weight. I want to see what they're doing. If we look at some individual stocks, we have like a NVIDIA or a clad tanker below the 200-day, and I talked about this last week, that if this breaks the 200-day, This is a potential shorting opportunity, right? You got ADI, Intel, still acting good. Intel is still acting good. Watch the 50-day moving average on continued weakness. The banks are acting like crap, and even though they had earnings that came out, still just not really acting very well. It did come out of this small pattern. I sent an intra-week update. I was sure to highlight this is not a bear flag. Okay, it's not a bear flag because we're above the 200-day and we're overall in a range. And you can see here it kind of snapped back. There was a great article how Bank of America reported record profits thanks to the tax plan and everything else, and yet still didn't really do much. It didn't do much at all. Wells Fargo with the big fine, but that's coming off its behind, right? Well, isn't that funny? Oh, big fine, but yet it's bouncing. Well, why? Well, because it's a sell the rumor, buy the news type of event. Okay, still don't know if it's out of the woods yet. It's still below the 200 and the 50, so it's not a long trigger here, but just something to pay attention to. Here's JP Morgan acting better than some of its brothers and sisters, and here's Citigroup. All right, so if we go to the broker-dealer index, it's acting better than the banks, but here's Goldman, not acting so hot, but between the 50 and the 200-day, so it's tough. Here's Morgan, same thing, between the 50 and the 200-day. Very tough to put your thumb on it here. How about the biotechs? So the biotechs, they popped up, now they're back just below the 50 and the 200-day, so you want to watch this. Here's Biogen, looks like it's going lower. Here's Gilead, looks like it's going lower as well. Let's look at some glamour stocks. Here's Amazon with a nice pop to the upside here. Watch to see some sort of pattern form out here. So it came out of this beautiful consolidation pattern. Now, if we do this and we do this, we can see it's, but again, not really connecting many points here, so just estimates here of this coil, right? Here's the Apple, back down to the 200-day moving average, all right? Is it going to hold? Because if it goes through, watch for a quick retest of 150. You know, yeah, Apple's been a tech darling, but it's also been a tech scapegoat. You know, a lot of people, it was the first one to go into an official correction and everything. So just watch it. Okay, it was a nasty day on Friday. The Goog, a.k.a. Alphabet, okay, on a nice little bounce there. The Facebook, consolidating right here. So what does that tell us? Should be looking for a move one way or the other out of this. Yes, it's below the 200 and the 50, so it's tough to have a bullish bias on it, but the consolidation takes that shroud away, and it just says, okay, wait for a move one way or the other. Netflix had a big earnings announcement. Now it's consolidating. Wait to see what happens from here. I don't know if I'm ready to just jump in and buy here. Caterpillar, watch the 50-day moving average test. John Deere acting poorer than Caterpillar. See if it gets down to the 200-day and see if it holds down there. All right? Okay, let's look at bonds. Bonds starting to sell off. So a lot of people, oh no, the market's selling off, bonds will rally. Yeah, it doesn't work that way. Okay, there are times when they actually are correlated. They move together. So again, I had said in the previous few weeks that this all looked corrective to me. Looks like it's headed back down to these lows at a minimum. Gold, on the other hand, consolidating and chunky in here. I like to call this kind of pattern chunky, all overlapping. GDX was headed, which is the gold mine, is headed to 24. Instead, it turned tail. How about oil? Well, oil on a run. I read another target of $80 for crude oil. It's trading around 68, 67s, whatever it was. Everybody's thinking it's going to $80. Can it happen? Of course it can. Okay, first of all, it could be self-fulfilling, and also the public isn't always wrong. The majority is a better term to use, isn't always wrong. A lot of people say, oh, wherever the public is or wherever the majority is, go the other way. Yeah, it doesn't work all the time. Sometimes the majority is correct. So, I talked to a friend of mine, he said, oh, I heard $100 target. Okay, well, that's even higher than 80, but everybody's thinking oil higher, oil higher, oil higher. So usually, seasonality-wise, it usually tops out into the July 4th holiday. Well, that's a few months away still. All right, so to wrap it up, first of all, if you're not on the email list, get on the email list. I have a special announcement coming out Monday morning. Join the Facebook group, facebook.com/group/attack the markets. But I am looking for short-term weakness here. I do not think we're taking out the February lows. I think we're going to put in another triangle point. Then I think we're going to start the final triangle point, then I think we're going to start moving higher. All right, but all this will take several weeks to several months, right? I'm not thinking it's going to happen all this week, but who knows with the way the volatility has been acting. All right, so I'm watching the 200-day. I'm watching these Fibonacci retracements. If I'm wrong, well, last week's high is going to be a pivot for me. I want to see if we take out that pivot. And yeah, even if we do, I'm still looking for us to put in a lower high relative to this high, because I'm still thinking the triangle has at least one more down point before it can rally. Okay? Any questions? tiny@attackthemarkets.com. Give me a like on this video so it moves me up in the YouTubes, and join the list and join the Facebook group. I will talk to you one of those ways or in next week's video.